Good morning. Thanks for stopping by for the Farm and Ranch News. After incurring record high input costs and one of the worst droughts in 30 years, farmers are enjoying a turnaround in conditions. Not just improved moisture, but also some major expense items starting to come down. Shay Richter from Wilbur Ellis told me that glyphosate costs in particular have tumbled down, creating an opportunity for growers to lock in some lower costs.
At the prices we're seeing today on some of this Roundup, I would have no problem locking in a year supply, maybe even longer than that. Last year, a shuttle of Roundup RT3 was about $11,000. This year, we're looking more in that $3,700.
So what's causing the price drop in the glyphosate market?
Well, there's a lot of stuff at play. The generics have oversupplied the market for the last month and a half, and I guess Bayer is just going to go ahead and swing for the fences and protect some of the market share. These weeded systems that a lot of you farmers out there are running, I think that's taking a bigger impact on demand than what Bayer was thinking originally. So a great opportunity here.
Shay adds that fertilizer prices have also come down to levels not seen in years.
We're down about $300, $250 from even where we were this spring, and $500 off of last year. I haven't seen urea with a 4 in front of it probably in 4 or 5 years. So we have opportunity to lock in a little profitability for the next year.
Well, thanks for joining us this morning. We'll see you back here in an hour to talk about our markets.
We asked Montana farmer Walt Sales about the challenges of mental health in agriculture.
Another drought. There always is. There's always going to be another something. I grew up in a generation of you pulled yourself up by your bootstraps. But it's become evident is what do you do if you can't even find those bootstraps? If you need to talk to somebody, go to beyondtheweather.com for free counseling for Montana ag producers.
Welcome back to the Ag News. A new report from CoBank predicts that a mild recession is coming to the U.S. economy by the fourth quarter of the year. The report says the U.S. economy has not seen the full impact of monetary policy, including higher interest rates and tighter lending standards. CoBank predicts grain markets to remain volatile due to drought. Tighter cattle supplies, though, and robust demand are spurring market momentum, though they caution consumers could balk at higher beef prices. And sugar prices remain historically high as markets ration tight global supplies, and the U.S. is looking at a smaller sugar beet crop this year. Well, a strong finish last week for cattle futures, surging with $1 to $2 gains despite corn moving higher. A standoff in cash cattle trade as feed yards refuse to give in to lower bids. Reported cash trade coming in $1 to $2 stronger. The weigh-up market continues strong. At Billings Live, we saw a lot of bulls selling from $140 to $150, some in the 160s, dollaring up to $4,000 a head. The cow market firm as well, with the bulk from $105 to $111. Feeder lambs in Newell significantly higher, 60 to 80 pounders 202 to 213, 80 to 100 pound lambs 195 to 207. And the wheat market found double-digit gains supported by a dry forecast, declining spring wheat conditions, and uncertainty about Russia continuing the Black Sea grain initiative. Well, thanks for joining us for this morning's report. Have a great week.